All right, let's do a little quick breakdown again. So basically, we saw price running up here, right, making higher highs and higher lows. I'm kind of just going to get right into the structure of this because mainly what we were seeing today were intraday plays. Let me get all of this marked in. All right. So we marked in the structure first, right? We already knew that we swept an inducement from the past, right? I mean, like I said, as there's more time that goes on, there's higher time frame inducements when we sweep them, right? We tend to have a pretty crazy reaction from them. Um, in a way, I do expect this thing to melt, but at the same time, we also just broke liquidity from down here. I don't have it marked in right now, but all of this was a daily injection at one point. So pretty much that becomes a daily OB. Moving in here, the first trade that I spotted today was actually right here on the 10-minute, right? The reason why, it's the same setup every single day. First, before I get into NY, London was very simple, right? We simply just had a sweep right here, right? Or the FF highs had a sweep, and we simply could have taken entries somewhere along this point here at some point, right? Why? Here, let me zoom in a little bit more so you guys can see the price action. Right, as soon as this engulfed right here, right, these two candles took over, right, the buyers at this point, right, this is where I kind of understood that I can take anything in this area, right? If we want to go into refinements here. Let me go into the 1 minute real quick. All right, we can mark up structure within the POI. Right, where did it leave the POI? Right, it's leaving the POI somewhere around here. So that means this is my most important structure points, right? This candle broke, right? Needs to be an immediate test, right? It looks like we did not get an immediate retest. We consolidated a little bit, right? Ran up. This was the candle that actually swept something. This candle swept something as well, so we got to mark that in. This one was an extreme, right? So you can trust it a little more, but you can see it swept all of this price action in the past here. Now, because of that, like I say, every time we have a nice sweep, we're sweeping multiple candles, right? The more it's sweeping, the more powerful, right? We're sweeping 1, 2, 3, all this right here, right? Well, this is only sweeping, right, one candle here and not even sweeping the one before it. So this would be our most probable refinement. I had to go short on EU. What else here? All right, now we can kind of hop into. I'm trying to think real quick because there's always some other M1 refinement that I'm missing, right? Because there is another one somewhere. It would honestly be this right here. As soon as we have this, which is railroad tracks, right? Two parallel candles next to each other, just like so, right? Generally, we get a nice little pullback and retest into it, which is kind of what's happening here, right? It's almost acts as like a bearish engulfing for the most part. It looks like we came and tested a little bit in here. We could have started selling, had stops up here. So this was another possibility as well. If you had stops up here, I've talked about in my YouTube videos and I've mentioned this, but smart money, order flow trap, right? We're always going to maybe wick just a little bit of whatever order flow is coming in the market. So it'd honestly be the smartest to have your stops up here. Although if you truly want to be super aggressive, right, you can't have your stops down here. You just would have wicked a sell. Yeah, that's how you refine it, and that's how we found this type of trade, right? Just simply waited for an external, right? Notice how this is all external liquidity. It's all on the top, right? It's the easiest to kind of identify, right? External, right? So we knew that this was a very probable shorting trade at FF. This is how I kind of saw EU today during New York. Again, another very simple thing. We already cleared, let me pull up the Asian, right? We already cleared Asian lows, right? Because we cleared Asian lows already, I immediately came to thinking, all right, well, this thing's just going to continue melting, right? Because it already hit the highs, right? We mitigated the Asian highs as soon as Frankfurt kind of came out, right? And now we're mitigating the lows, right, at the start of New York, which is telling me, all right, we can definitely start shorting here from a daily cycle perspective. Our last external sweep was also short, right? So I know to continue my bias short, right, based off of what Frankfurt and London has done. Um, Now, how did I see all this play out in the beginning? This was like minor inducement right here, right? This that was going on here, the Asian lows. Right, so as soon as we broke those lows, right, I was asleep, so I didn't catch this original entry because this was at 6:30, right? This candle came in at 6:30, right? What was the breaker of that candle? This was the breaker, right? This was the candle breaking it, and this is the candle causing this candle to break it. So this could have been, or pretty much would have been your first entries if you were truly trading New York at the very start, right? Or beginning of, or the end of the dead zone. Where I started to get in was actually right here. I saw this candle inducing, right? Meaning this candle was the breaker, right? Super simple. And that's how I was able to get into shorts here. Excuse me. Anyways, I got into some shorts here. How did I refine it? I originally refined it on the 10-minute. I always say if my OB, right, the candle engulfing the OB is lower than the high, this can be one of your refinements. And then we can go into the lower time frames to refine it even more, right? So generally, I'm too lazy to go into the 1 minute to actually refine this, right? Like in all honesty, it's not really that I'm lazy. It just really helps my psychology because I don't have to see all the noise associated with the 1 minute that really screws up my thought processes, right? Like I can still see that this is a good enough refinement. If my SL is still above the high, then at least I know I'm safe for one, and two, I'm still getting a tighter SL, right? I don't, as much as I like to be perfect sometimes on some of my trades, right on the 1 minute, that's when I have to kind of really be in my trading zone for that. I have to really be trading on my own because it takes a lot of just mental power, I guess, to stay on the 1 minute chart and eye everything. But I can go into it, kind of give some explanation to it. Right. I didn't trade really using the 1 minute today. I honestly just waited for this 10-minute sweep. Right. So I got into this refinement over here. A lot of what SMC was seeing, right? So here's your structure. Same exact thing in the POI. If I take this red structure break here, was the candle that broke. It was this one. And I always tell people, right, when we're trading in the middle of a high and a low, like right here, right, it's okay to drag this up to the extreme, right? So I know a lot of SMC traders had this as their refinement. If we look on the 5 minute, we can kind of see that it matches an OB, kind of tightens that 5 minute OB just slightly. So in reality, entries could have been taken immediately somewhere around here, right? Or you could have taken it the immediate touch of the 10-minute OB, and or if you truly wanted to stay to the best of the best here, you wait for this to wick above this extreme, right? And we also have an extreme OB on the top here, right? Your highest probability is always going to be the extreme, right? However, it's not always likely to come there. Like as you can see here, a lot of the time price will tap, run, and it won't ever come back up to the extreme that you want it to. But yeah, these are still possible. I'm okay with losing these, right? Like I'm okay with taking that first trade, taking SL on it, hopping into this one because look, I'd obviously recovered. So it's really fine to take losses if you want to get these tighter SLs. Um, so yeah, we can see what else happened for the rest of the day. Right, it was just the same pattern occurring over and over and over and over and over again today. For the most part, you can see how repetitive this method is for the most part. Also, like I always talk about how you don't really need like liquidity to induce the POI above like this. Like this doesn't mean anything to me. I think this is made up because as you can see, right, we still have clear mitigations here to here without a huge liquidity buildup, right? People always talk about, oh, this is the inducement to the POI. I really don't see how it does much in reality. Things just after seeing how price reacts in a POI in general, it's more so what is it inducing like liquidity, like where's the macro liquidity? Where's most of the liquidity buildup, right? Like this little pool of liquidity really doesn't mean much. What I will say though is it does catalyze, as you can see, bigger moves, right? Like we have a little bit more liquidity here, right? It kind of catalyzed a bigger move. But if anything, with that being said, if so many people are recognizing this, then how many orders do you think are being stacked? Probably in the same place, right? Like everybody's looking for this sweep into the POI. Well, then if all those orders are stacked there and you don't have people using ECM brokers, then again, we're going to get hunted out of the POI, right? It's just how quantitative and or high frequency trading is depleting orders. Um, anyways, we now have a new POI here too, right? The supply chain literally keeps going, right? Order flow, supply chain, whatever you want to call it. This candle did not completely engulf the low below, right? So because of that, I was not able to take this whole thing as a POI, but rather the open to the highs here, right? Kind of act as my POI, right? Because I understood supply was entering. Now, why did I take it as well? This candle right here was breaking the inducement, right? This was the candle to break it. This candle behind it was relative, right? And had an OB, like this OB obviously had some sort of confluence to the next candle, right? Like a huge move was still able to dump right now. So how did I refine this? This one was a little bit different, right? When we have this candle sweeping, right? The OB, generally what we'll have is a open, high, low, close entry method where this would be your highest refinement on the 10-minute, right? You then have your open as another. It doesn't look like um, we mitigated that though. And then right here as well. So this would be your open, high, low, close entry method. Now, if we go into the 1 minute, we can track structure now. All right, structure is like the best way to really refine. I would say on the 1 minute, we can see that we're building lower lows, and what happened? We swept. Right here, we also had a break of structure. Right, when we have this break of structure, we have to find the OB within the POI, not outside of the POI, within the POI that caused the break of structure. That would be this one, right, which allows us to grab these shorts here as our refinement, right? We then have what coming down here, not only that, but this as well, another break. Right, and like I said, we always have to come back into the POI, right? We do not want to take this, right? We don't want to take this or anything like that. I know from a rule-based perspective, right, normally we'll take the candle that's breaking, but in this scenario, when we're refining our POI, the entry must be in the POI. I actually don't think I got any entries here because my refinement at the time was just this bit of supply here. And then my ultra refinement was this candle here because this little candle would have been the breaker for this that's within the POI. I also understood that all this right here is supply on a higher time frame, right? Like perhaps if we go on the 5 minute, can maybe not on the 5 minute. All right, but on the 3 minute, right, we can clearly see that all that this candle right here is an OB or supply, right? So that's kind of how I drew all that in. Um, and then we use the 1 minute like right here to just tighten it up a bit. Anyways, we can continue doing structure since we're still within our POI. This one's interesting. I wouldn't normally do this. I still wouldn't actually, but okay, here's our break of structure. But this is a little bit of a change of character, right? Because we have this change of character happening right here, and we're still resisting the POI right here too, right? There's this bit of imbalance, right? This right here was originally supply, right? Like on the higher time frame. Now this has already mitigated it, so we want to go a little bit higher because this is now inducement to this refinement. So that's how you could have gotten these entries here. I didn't grab these. I'm just showing like what was possible. I'm still in these shorts. I'm still holding. Uh, I did see on the 10-minute a little while ago, like an opportunity to possibly buy right here, but at the same time, it was not during the trading hours, right? Normally, mitigations do not mitigate nearly as well when we're outside of trading hours. Um, I couldn't really tell you why that is, but I guess because there's really just less volume coming in the market, right? So it's easier to detect technical traders trading technicals, I guess, right? So that's why our mitigations are a little bit cleaner during session opens is because that's when most of the volume and money is coming through. So right, that's why people in liquidity inducement theorem call it magic minute mitigations, like the opens of session timings, like the 9:30 a.m. New York Stock Open time and the London Open time too. You're gonna see some pretty nice mitigations. It also goes the same. It goes for the same thing for news, right? Like I've talked about this with many of you, but news will simply wick to a M1 OB on the minute that the news is released. Like it'll touch a 1 minute OB and or mitigate an imbalance right away, and it will run, right? It will wick and it'll just run. And that's primarily because there's just a bunch of volume coming in the market and the actual algorithm, right? The quantitative algorithms that are out there trading to stop people out of their positions, right? Because they know where your orders are. They can't detect where technical traders are because there's just so much volume coming in the market. That's why it's really great to trade pre-release of news, but not post-news, right? Because everybody's done trading. For the most part, post-news is really hard to trade post-news generally. Um, and also it's really good to trade when there's just high volume days, right? A ton of volume in the market. And it's generally when markets are trending, right? That's why trading a trending market is generally easier. So hopefully people get an understanding of like the fundamental aspect of what we're doing as well, because it's more than just like, sweeping a line, right? Like there's actual science to what we're doing here. Like there's actually an actual out there really is an algorithm out there where high frequency trading firms and quant firms are really trying to run people out of their positions. So it's interesting to see that. All right. That's really it for the breakdown.